I saw a lot of nervousness expressed yesterday as a result of the decline in the price of gold. There have been many calls of much lower prices to come. And of course, there are complaints about market manipulation. I thought I'd put this video together just to put things into perspective. Now, I'm not a technical analyst, nor do I really believe in its merits as anything but a self-fulfilling prophecy, but I suppose if I were, I would be inclined to put a resistance line here at $1,800 per ounce. But that's about as far as I'm going to go in that direction. What I'd like to examine is just how common price declines like what we saw yesterday and weekly declines like what we've seen are. So let's take all of the London PM fixes since Nixon closed the gold window and analyze them. There have been about 12,400 in all. If we calculate all of the daily percentage changes, sort them in order, and graph how often we see percentage changes of various magnitudes, we'll come up with a chart like this one. This is a cumulative probability distribution. I tried expressing the changes as a histogram, which is probably more familiar to people, but doing so obscured some of the very large changes that we've seen. So the way to read this chart is this. If you're interested in how often you'd see daily price declines of, say, more than 1%, you'd go to the x-axis, pick off the -1% point, draw a line up to the curve, and then look at the corresponding y-axis value to see how often such losses occur. What you'd see is that they occur about 12% of the time. If you wanted to know how often the gold price increased by more than 1%, you trace the x-axis value of 1% up to the curve, look to the left to the y-axis to see how often we'd see price moves less than +1%. In this case, 85% of the time, the price of gold changed by less than +1%, and so about 15% of the time, we'd see price gains of more than 1%. Now, with that little bit of background behind us, let's draw some inferences from this chart. What we can see is that for all of the days that we've had a London fix since Nixon closed the gold window, about 10% of the time, we would see daily losses of more than 1.2%. About 10% of the time we'd see price gains of greater than 1.3%, and the other 80% of the time we saw price moves of anywhere between -1.2 and +1.3%. So how about moves like what we saw yesterday? It was a loss of more than 3%. How often have such moves occurred? We can see that about 2% of the time we've had daily losses of more than 3%. This is about once in every 2 to 3 months. Are losses like these infrequent? Well, not really. If you hold gold for a full year, you'd expect to see several declines of this magnitude. But you'd also expect to see large daily gains of this magnitude with about the same frequency. Now, how about weekly price movements? How often do we see weekly price changes like what we saw this past week? We can use the same data to answer that question. As it turns out, weekly price losses of more than 2.5% have happened about 10% of the time. We can also see from this chart that about 5% of the time we can expect weekly price declines of 4% or more. So this week was hardly unusual. Of course, this is using all of the data available. It would be a fair question to ask how often such price declines occur during bull market phases. After all, maybe the large price decline that we saw is a harbinger that we are resuming the bear market in gold that started in late 2011. Okay, let's take a look at all of the data from only the bull market phases of August 1971 through the peak of 1980, the trough in 2001 to the peak in 2011, and the trough set in December 2015 through today. And what we can do is eliminate the two bearish periods and only look at the time frames when the price trend was up. And here is what we see. The frequency of daily losses of more than 3% during bull market phases does decline, but only a little bit. Whereas it was 2% for the entire data set, daily declines of 3% or more happened about 1.75% of the time. So instead of this type of decline happening every 2 to 3 months, we can say that it tends to happen about once every 3 months or so. It's infrequent, yes, but not uncommon. We certainly can't say that a large decline is a sign that we're entering into a new bear market. Notice that daily gains of more than 3% also occurred with the same frequency. Now let's look at weekly declines. Notice that the distribution hasn't really changed all that much from when we were using the entire data set. Weekly declines of more than 2.5% still happen about 10% of the time. Now there is another thing that I'd like to point out here. You can see that weekly losses of 5, 6, and 7% or more also occur with regularity. During bull markets in gold, we can expect to see weekly losses of 6% or more happen about once per year. These tend to be scary times for new holders of gold, especially since large declines also tend to be accompanied by lots of forecasters coming out and predicting much lower prices ahead. My suggestion is to ignore them. This kind of thing has happened all the time. A large price decline is not a sign that the bull market has ended. Nothing has changed in the fundamentals that would suggest that gold is not a better long-term store of value than Federal Reserve notes.